Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player.
Good day, all. Ira Epstein of Linn Associates with your financial market wrap-up. And here we are at the end of business now on Wednesday, and this is the 9th of May, 2018, about 4:40 p.m. Central Daylight Time. So stock market up. You know, when I was on Fox Business yesterday, I said, it's a one-day, maybe a two-day event on Iran. It's just not going to matter. I think that proved to be the case. Interesting day in crude, because if you read the EIA report, and those of you that get my nightly subscriptions and my twice daily updates, you're going to realize that the EIA is saying that crude oil, actually this price, by the time you get to the end of the year, if they're right, this is way too high. I don't know if they're right or wrong. The other thing that they wrote about is the fact that you're at 95 capacity in the pipelines from the Permian Basin, and the WTI crude out of Midland is running at about a $12 discount to Brent oil, and it could go to $14 by the end of November through January. Gold market, didn't do much. Silver gained on it today. Dollar index was actually higher than this in the close. Remember, these are settlements that are done before, they're done around 2:30 before the real end of trading. So you get an idea of where they're at. But let's go to the stock market. The weekly area chart of closes is up, as you can see, at least moving higher in an upthrust, but you still have this problem at 2709. I expect that to be a problem in the market temporarily. So we're from there, 13 points away, and I'm still calling that that'll be a resistance point. We'll see if I'm right or wrong. The action today was pretty constructive. If you look at this and you put the swing lines on, you can see you've got higher lows, higher highs. So until the market takes out 26.52 and a quarter, you've got a market in an uptrend. It is now trading over the 18-day average of closes. The next moving average that could be resistance is 2708.50. The 100-day average, which will tie in, and I'm sure you know it, I've been watching, with your Bollinger Band, which is 27.15. They don't always do that, but they've been running very close to each other. And the Bollinger Band's going to scoot up a little bit because the math as to how you closed here, and if you understood the math of the Bollinger Bands, it'll move up on you just a little bit tomorrow. Keep in the back of your mind that the idea here, when you're looking at Bollinger Bands and these moving averages, you're trying to get an idea of where the market is, especially in sideways markets. You have a sideways market. You are not sitting here in a market that is running like it did in 2017. In fact, this market peaked January 29th. It's been coming down ever since then, and suddenly, instead of falling any further, it had its big break, as you know, in February. The market's had milder breaks at this point, but a lot of sideways action, which is fine. Markets don't always have to advance or decline. You can go into trading affairs, and that's what I think you have. Do I have a bias right now? Up until you take out 26.52.25, but you're overbought. So when you put together the combination that you're overbought in a market, you got two levels of resistance. I am expecting tomorrow to see the pros, if the market gets up there, lighten up at that spot. I expect to see some resistance. In the NASDAQ, you hit that resistance point today. You hit the upper Bollinger Band if you take a look. The market, actually, let's see where we're at. The market got to 69.01 and a quarter as a high. The Bollinger Band is 68.96. I'm sorry, 69.17. You actually missed it if I'm correct on that. Because the settlement, yeah, you just missed it. It looks like it hit it there. It didn't. It's just shy of it. But again, overbought in an uptrend when you come to the Dow. In an uptrend, in overbought condition. I consider any reading in the stochastics that is over 70 to be overbought. So you have it here in the Dow, you had it here in the NASDAQ, and you've got it here in the S&P. So just to clarify that for you. Russell, what do you think? I've been saying this will be a resistance zone, 1603. It'll be a little higher tomorrow because of how this works. You got today to 1660 and the market stalled. As you get near those numbers, traders know them and they look at them. Now, do these numbers change intraday? Of course they do. I use live charts during the day, and so do other people. You're not trading on old delayed charts, and this isn't delayed. We're closed right now. But you'll see if you watch tonight's action what I'm talking about. The key is you're getting overbought. The market is back up at areas it has been. In the VIX, you're back into a downtrend, lower highs, lower lows. I think the big question on everyone's mind, are we going to go back down here? And what else? While we had that one spurt of activity in February, if you look, the volatility of the market just keeps coming out and out and out. And I'm seeing that on daily volume numbers. It's shrinking away again. So just the way that it is right now, and you're getting tighter ranges, we'll see the next impact. As for interest rates, I saw the auction today on the 10-year notes went for 299.5. That's a pretty high percentage. You're not going to get on the 3% area. Today's break carried the market, if you look, at 142.15 under the last break low. So you're trendless, but you're keeping a downside bias. And please notice this red line. I try to explain here so often, and I have my live webinar tomorrow where I'll explain it again, that the 18-day average is like a line in the sand. And at that line, if the market is under it, it is not uncommon for the market to go back to that number, try to figure out what to do. If you're rallying, it's not uncommon to get back to that number to figure out where the next move is coming from. If you can get the setups of lower highs, lower lows out of that and so on, I think you develop what's called trend trades, and you can see that you did that right through there. Doesn't always work that way, but it's one of the ways. Want to remind you, since I mentioned the webinar, that I'm going to have that free webinar tomorrow. It's at 12:30 p.m. Central Daylight Time. You need to register now to get into it. It is free, as I just said. If you didn't get an invite, and I'm done sending the invites, they're all gone. All you need to do is give us a call at this number. You should take a look at about 2:30 this afternoon Central Time. I sent out the last group of them one more time. A lot of you have responded to it. You can always click up here if you're watching me on YouTube. Sign up because you need the password to get in. Just the link to the webinar is not going to do it, and that's in our confirmation email. Okay? All right. So we're looking at how the bonds fell here at the beginning of the year. And like the stock index, you know, once you got to that 3% number down at these lows, you've been staying there. If the market gets under, let me explain it the right way. If the market rates get over 3%, each time they do, it acts as a bit bearishness in the stock market because people get nervous that the market's going to keep climbing. Some people think 3.5% is going to do in the stock market. Other people think that 4% is the number. You know, you can get it all over. I was fascinated, though, that the EIA, Energy Information Agency that we have, there's a problem. The administration's actually the last word. They're looking for GDP and everything to slow down worldwide in 2019 in their forecast of energy. In the 10-year note, higher high, lower low now. Momentum starting to shift down. Failure at the 18-day average of closes. TLT ETF, lower highs, lower lows. It too is saying that higher interest rates look like they're right here. You'd have to take out the 119.02 area to negate that. Dollar index just keeps moving higher, and this is what you call an embedded reading. A market can only become embedded by first becoming overbought, and then when the indicator that makes up slow stochastics, there's two lines that crisscross, but when they both go sideways over 80 for several days or more, they're embedded, locked in. And until the red line closes back under 80, I expect the market to continue up and breaks to be well supported by those that are bullish. The flip-flop has happened in the eurocurrency. You have a bearish embedded reading. The market is broken down. And I realize people are going to say, you know, at 118, the market's got support. I heard that at 121. I heard in the British pound we were going to 150 at the beginning of the year. You're now down into the 135 area. So a lot of these bank reports that I read, and I believe me, I get more emails than you can imagine. I want to, so I sign up for them, and I like to know what different people are saying. But the market tells you in the chart. Everything that everybody writes is in here anyways. You've had a bearish crossover. It's still the market under pressure with an embedded reading. The Japanese yen is reinstating its downtrend. It finally now back to lower highs, lower lows. So you had this little bounce. I thought that when you lost the embedded reading right here, as you got lost it, I thought we'd get up to the 18-day average. You often do. You had one stab and you haven't done it. Doesn't mean it still can't do it, but you're back into the downtrend, but admittedly oversold right away. Bitcoin came down. Remember we were talking, would it hit the 18-day average? It just missed it. I still think it can get down to it, even though today you were up $40 in it, but we'll see. Now, I've got the June here, as you can see. I'm going to switch back to the May. I've looked at the open interest and volume. This is really not the most popular. I think it's the right contract because you don't want to be in a month where you can get deliveries and everything, but the way they're trading Bitcoin, that seems to be the way to do it. Still staying in the $6, $6.60 range in the Brent crude versus WTI. And if we take a look, the market's sticking its head up again, overbought. Now, it's interesting how this is working the same with the WTI. If the EIA report, and I write a lot about it tonight in my market letter, if the EIA is right, then something's amiss here. Okay, why does this market keep trying to move higher? You are overbought, you're back over the upper Bollinger Band, can it keep going higher? Gasoline market, back to the upper Bollinger Band. You know, this is a difficult market to ever want to be short in the summer, as is natural gas. I realize there's plenty of natural gas, but the first time you're going to hear the East Coast is going to be 90 to 100 degrees. This market comes under big demand. This will act as a base. That is the typical story. There's another story that happened today, and I think it weighed on prices to a degree today. California has passed a law that starting in 2020, most new homes that are going to be built have to have solar energy. You heard me. And they're estimating the cost at $10,000 a home, an add-on. Now, that'll probably fall because if that law holds up, people will have to build all those homes. Well, then you're going to get what's called the commoditization of solar energy. If it works in California like that, why not Arizona? Why not New Mexico? Everywhere there's this hot sun, take advantage of it. Well, we'll see what that does. I think long term, that is a definite problem for nat gas if that becomes a trend. Again, I hope to see you all at my webinar. That'll be tomorrow, 12:30 p.m. That's Thursday, Central Daylight Time. Hope to see you there. Take care.